from the end investor's perspective, I know you guys work with issuers, the banks, but from an investor perspective, when they want to exit their investment, they want to liquidate. What does that look like? What role does the issuer play in facilitating that market making? What does that process look like?
Yeah, like with an ETF, there's a secondary market, and so typically, especially for smaller AMCs, you just have the issuer actually make the market. And if it's exchange traded, you can literally go on the exchange and just dump your position. If it's There are also different styles of these investments. One we call fund style, and one we call certificate style. And then depending on which style it is, you would handle it slightly differently. So you could have, for example, if you have an off exchange product, an OTC product, it would be possible for the issuer to, like, if you have more illiquid underlyings, like for example you have hedge funds in there or whatnot, or real estate or whatever, then you can actually handle it more like a subscription redemption, and actually reduce the frequency so you have enough time to actually get out. Because if, for example, if the underlyings are hedge funds and they only provide NAVs once a month, then the AMC that contains those hedge funds cannot offer more frequent liquidity than the liquidity in the underlyings. So it varies quite a bit. But normally, I mean, most of the stuff is, typical stuff that people do with this is they do very liquid stuff. They do, for example, thematic baskets. That's like a very common thing that people do. People kind of moved away from the traditional core satellite portfolios and now do these big ideas, big thematic baskets. And that for that, AMCs are perfect. And this has kind of shifted as well, right? I mean, even actually you see this in ETFs as well, right? You used to have, when it all started in the 90s with these, you had spiders and you had whatever, you had just a few ETFs, and they were all like big index ETFs. But now you have basically for every sector, you have XLE, you have XLF, you have you have a separate ETF, and you see the same kind of thing for AMCs. And even more so, you see, for example, people, for example, have a battery focus, or like lithium battery focus, and then they have some physical lithium and some battery factories, for example, or you have
might be like
people,
AI or something.
Yeah, AI is a very good example that has been popular recently. And then you can decide where you want to be. Do you want to be in the supply chain with NVIDIA and all these guys, or do you want to be even in private equity kind of deals with OpenAI, or do you just want to do the FANGs of the world? There's really a lot you can do with AMCs. And this has also changed kind of the sizing of these products, because when everybody used to have just the index, you had one big AMC or one big ETF, and now you have thousands. Actually, I believe there are more funds now in the US than there are underlyings. So, and they're just linear combinations of the underlyings, right? So, and I think the same thing you see in AMCs. Yeah, it's you see then that a typical AMC maybe 10 years ago used to be maybe 20 million, and now a typical AMC is maybe 5 million. But you have many more. You have 10 times more of them. So overall, the assets in the space have increased, but you have more products to manage. And obviously, this is where our platform comes in, right? Because as a bank, if you manage the same assets, but you have 10 times more work because you have 10 products to rebalance, then it's no longer economical to just hire more juniors on the desk to do this for you. And then it's really the clear case for automation, and that's what we provide.